but there was plenty of drama from the bond market and still is actually. Ashok Gautam of Axis Bank and Mohan Shenoi of Kotak Mahindra Bank join in to talk about that. Gentlemen, morning to both of you. Mohan, it was a bit of a shocker to see the way the yield opened up yesterday. Does it look likely that things are going to remain this elevated in terms of yields all the way till the policy?
Yeah, you see, even though there was a redemption of a high amount of around 26,000 crores the very next day, the RBI's bond issuance, the government bond issuance of 18,000 crores did not fully get absorbed by the market. There was a devolvement of around 1,100 crores. That shows very clearly that there is no appetite for bonds in the market, and there is a supply pressure under which the market is reeling at the present. Now there are only two things that can change the sentiment or bring the yields down. One is the continuance of OMO. Now here there is a problem because on year end the government had a surplus of about 1,20,000 crores with RBI. Now, as and when the surplus comes back to the money markets, the liquidity deficit is expected to come down to around 70 to 80,000 crores, which currently is around 1,30,000 crores or so. So, when it comes down to 70 to 80,000 crores, the room for further OMOs will be very, very limited. So, therefore, market has not too much expectation from the OMO side. Now, the other thing that can change the sentiment is basically the lagged effect of a repo rate cut. That is quite likely because core inflation is showing trends of coming down. It was 5.7%. We expect it to come down below 5.5% for the last month, and therefore with falling core inflation, I expect a 25 BP cut in repo rate in the annual policy of Reserve Bank of India on the 17th of April. So that could of course have a lagged impact on the bond market, but there is no point in bringing the policy rate down from 8.5 to 8.25 if call money rates continue to trade at around 9.25 and 9.5%. It won't serve any purpose because funding costs for banks will remain at elevated levels. So my own take is that given all this, there will be some support to bonds at around 8.75%. It could go, on a temporary basis to the earlier high of 9%, but it will not sustain there. It has to come down as policy rates come down. It will come down and it will settle somewhere between 850, 875. This is my broad expectation at the moment of the bond market.
Ashok Gautam of Axis Bank as well joins in on this conversation. Ashok, comment on this entire issue. Do you think there will be more supply pressure on bond yields after the kind of muted response we got in the auction yesterday? And what kind of a range do you think both the 10-year and the 12-year will stabilize at now?
At present, what I feel that, on the trading range side for the 10-year, we are seeing that it will be somewhere between 865 to 885. We also have to see what has happened in the last 6 trading sessions. In the last 6 trading sessions, we have seen the yield spiking very fast. And we also saw some comment by some RBI official, that yields have risen very fast, which is not, they are not very comfortable with it. And that was, when that OMO announcement came on the last but one day. Now what I am feeling that the way things are going and the kind of calendar which we have, where we have no respite in any week, other than the 2 weeks where there is some respite, which are the advanced tax outflow weeks. That is the only time when we have some respite from the supply. I believe that the pressure will continue on the yields. But there are certain other factors which Mohan has already mentioned, which will going forward, support that the yield should not go beyond a particular level. But at this point of time, 785 looks to be on the card. But I feel that there would be some correction because this yield spike has been rather sudden.
Mohan, you raise an interesting point though, in that the RBI is probably being left with less and less elbow room in terms of moving with OMOs, something that the market is banking on in order to provide some liquidity relief. If that is the case, what would you say is the new base for yields, and does it look likely that on the upside we're probably going to see 9%?
Yeah, 9%, as I said earlier, we could see, whenever there is tremendous supply pressure, we could see 9%. But in my view, at 9, there will be a lot of buyers for the bonds. And, therefore, it may not sustain at 9% levels. And therefore, the 10-year will tend towards, as I said earlier, in a range of 850 to 875. That's the range, to me, it looks like.
Ashok, coming on the timeline of this entire issue, how long do you think we will have to live with this current liquidity deficit situation? And on the issue that we spoke with with Mohan as well, do you think that the RBI may, although the market is not expecting anything in terms of OMOs, do you think the RBI may be forced to go ahead and perhaps announce more OMOs from here?
Yeah, I'll give answer like this. See, at this point of time, yesterday's LAF numbers are in front of us, and today we already know there is a 26,000 crores redemption. So, and Government of India also will start spending money, which should have started by now. But I believe that the pace of that expenditure is right now very slow, but it will pick up as we go on. So April, what I feel, there will be not much liquidity, concern in the month of April as we go on. That is point number one. Now the point number two is regarding the OMOs. Now OMOs is it is for the liquidity, and RBI has been consistently saying that OMO is always on the card. They have never said that OMO will come or will not come. They say it is always there, and whenever there is a felt need, OMOs will come in the market. So that is second part. Now I would also like to speak about one more thing about the 10-year yield. We also have to see that already in the current 879 paper, we have seen already a supply of 56,000 crores. The last 10-year benchmark which we saw was there was a total supply of 68,000 crores. So now what we feel that as it is on every alternate week, so maybe the coming week and 2 weeks later, probably this 10-year bond will run its course, and we will see a new 10-year bond coming into play. So then there are again two things are happening. One is that as this bond moves towards being illiquid, then there will be a spike in the yield for this bond, and probably when a new bond of 10-year is issued, then we will see some softening in the yield for the 10-year going forward.
Okay, gentlemen, we'll leave it there. Thanks for joining in. Prepare for a bit of an uphill ride though in terms of what's been happening on the bond market front.